So you're thinking about getting a house with your fiance, or maybe you're already married. I'm gonna tell you if that's a good idea coming up. Hey, if you missed my live credit score boost training, don't worry, I got you. If you click the boost training link below, you'll be able to take part in that live training. Now, this training is for those of you that work long, hard days, and then you come home and you struggle trying to figure out what you're supposed to be doing to fix your credit. You don't know what to pay off and what not to pay off, what to dispute and what not to dispute, and you definitely don't know what you did wrong to make your score drop instead of increase. Now, what you'll learn by taking part in the training is my account identification process, which has saved my customers on average about $5,000 by not paying off accounts that would actually drop your credit score. I'm also going to share with you some accounts that have guaranteed approval, so you don't have to worry about if you'll get approved or denied, and these same accounts have helped my clients on average gain about 30 to 80 points. I'm also going to share with you my dispute process that I use that has given me an average account removal rate of about 13 accounts over a 90-day period. And not to mention, those of you that stay all the way to the end of the training, you're going to get a free gift which will help you with your credit disputing process. So if you're tired of going around in circles with your credit trying to figure out what to do, go ahead and click the link below for the boost training. I'll see you there. Hello everybody, Will Frazier here, your credit expert, bringing you the tips you need to get your credit back on track, because what goes down must come up. And if you want your credit score to drop 200 points, make sure you like this video, subscribe to the channel, and turn on notifications so you'll be notified of any new videos I drop just like this. So this video is about if you should co-sign on a house with your spouse. So let's say you're about to get married and you and your fiance are thinking about going ahead and getting a house, and it's time for you guys to stop renting. So you were trying to figure out, how does it really go as far as, getting on a loan and ownership of the house, and if you should do it or what it looks like, and you needed some clarity on that process. So before you go to the mortgage lender and sign on a dotted line, I wanted to make sure to give you guys some information that can help you out in this process. And there are going to be 3 major things that you need to know before you get started with this process. The very first thing is going to be if you can co-sign. The second thing is going to be should you co-sign on this loan. And the third thing is going to be how do you determine ownership when it comes to the home. Some of these things may be confused about, or some of these things you may think should be very clear to understand, but I'm going to break all these parts down so that you can understand exactly what's going to be going on and how it works. So of course, to get started, you're going to need to know if you can even co-sign to begin with. And just to let you know, if you have a fiance and you're about to be getting married soon, but you're not married yet, and you're about to go ahead and get the house, yes, you can still co-sign with your fiance. And if you're married, of course, you already have the understanding that you should be able to co-sign with your married partner. But there is a big difference when it comes to co-signing and co-ownership. They are 2 different things. One involves the loan and one involves the deed. But just know that it is possible for you to co-sign with your fiance or with your wife or husband. Now, another part about if you can actually co-sign is going to come down to your credit and your income. So basically, when it comes down to getting a house, each individual has to qualify credit-wise as if they were applying on their own. So one person can't co-sign in a sense that, the first person may not have the credit that's needed to actually qualify. So you get a co-signer that has strong credit that can allow you to go through with the process. It doesn't work like that at all. So basically, both of you guys have to have a qualifying score and qualifying credit report to make sure that you can be on this loan transaction. And in most instances nowadays, it's going to be about a 660 middle score that each of you are going to have, which means that at least 2 of your credit scores are going to have to be 660 or higher, and that is using the FICO scoring model. And of course, they're going to check your income to see if you qualify debt to income ratio wise. Now, a lot of people I run into, one person has the good credit score but no income, but one person has the income and the bad credit score. So of course that causes a dilemma. One person needs the other's income to be on the application, but in order for them to be on the application, that person has to have a credit score that qualifies. And of course, in that instance, the person with the lower credit score definitely needs to up their credit score and do some work on it in order for them to be able to get that home, because the person with no income or low income isn't going to be be able to get usually enough money for the house that you are probably looking at getting. And if I remember correctly, there is one loan type out there that will let you use a household member's income even if their credit isn't considered on the application, but it's been a long time since I looked at the details on that loan, so I'm not going to speak on that right now. So when it comes down to it, what you really want to be looking at is making sure that both parties have the credit score needed, because you're going to need the income, especially if you guys say want to get a really big house, a really nice house. You probably are going to need both parties' income if you both are working and have income coming in. So in order to get the home that you want, you both may need to make sure that you have your credit scores in a good place. Now they're going to look at things like your DTI, which is your debt to income ratio. They're going to compare your income to the debt or the payments on debt that you have showing up on your credit report, not things that are like your phone bill or your electric bill. They only consider the things that are on your credit report that are payments reported on your credit report, and that debt to income ratio is what ultimately determines how much money you actually get for the house. So if one person's income, and let's say that that's the person with the good credit score, if their income is enough to get the type of home that you want, then both of you guys wouldn't need to be on a loan necessarily. But depending on how much of a house you guys want, that's going to determine how much income you need, and then you can make a decision on what you want to do based off of that. But also, let's talk about the second thing, which is if you should co-sign with your spouse on this house. Now, a lot of times what you're going to hear people talk about when it comes to if you should co-sign on a mortgage or on anything with your spouse is going to be if you guys have a breakup or divorce. You know, you want to think about that, and you don't want to tie yourself to too many things, because it can make things really rough when it is time to do such a thing as divorce or break up. Well, just me personally, I don't like to think about that, because if you're getting married to somebody, you should have already done all of the vetting that you need to do with this person. So you should know that this is the right person for you, and you shouldn't be thinking about getting a divorce, especially not before you've even walked down the aisle. But that's just my opinion. But either way it goes, while that is something that some people do think about, the part that I'm talking about, what you should be thinking about when you're considering if you should actually co-sign or not, is going to be what would happen if you guys are still together and something like, say, a pandemic just happens out of the blue, and let's say both of you guys lose your job. Now, let's say you have both co-signed on this loan, so it is reporting on both of you guys' credit. Now, because both of you guys have lost your job, that means there's no income coming into the house, and that means that the mortgage payment may get behind. So while a mortgage payment is getting behind, it's a whole bunch of 30-day, 60-day, 90-day late payments hitting both of you guys' credit report at the same time, and it's tearing up both of your credit at the same time. Now, with that being said, if any of you guys needed to go do anything to bring some extra funds into the household, like getting a loan or just doing something that you may need to use your credit for, both of you guys are in a worse position, and neither one of you can make any moves for the household. Versus if one of you guys was not on the actual loan, then one of you guys would not have suffered that damage to your credit, and then all of a sudden now you're able to go out and get an emergency loan for the home, or just to do whatever it is that you may need to do with your credit to help out the home. And you know, that's something that's a more likely situation that you should be thinking about and preparing yourselves for. But of course, you know, you should take all things into consideration. If you guys need both of you to be on the loan just to get the amount of house that you want, then hey, you may want to go ahead and make sure that you are both on a loan for that reason. But if it can be avoided, I would usually recommend that you don't, just in case a scenario like that happens, because you know, we never know when a pandemic is going to just pop up out the blue, or when something may go wrong just on a regular basis in the household. So the most important thing that you really need to know when you're making these decisions that can kind of help put you at ease maybe a little bit, or just give you some more clarity, is going to be the third thing, and that's going to be how is ownership of the home actually determined. Now, a lot of people that I run into think that ownership of the home is determined by who is on the loan, and that's why mostly both people want to be on the loan. And sometimes people just want to be on the loan just because it's the cute thing to do, you know, to be on the home loan together with your spouse. You know, that's just the cute thing to do. But outside of those reasons for people wanting to do it, the determining factor of who actually has ownership of the home is going to be on the deed. So as long as both of you guys' names on the deed, then you are basically going to have ownership of that house together, and it doesn't matter if one person isn't on the loan or not. Now, Now, unless some other issue arises that causes you to not be allowed to be put on the deed, then you guys can both still have ownership of the home without having to put both people on the mortgage loan just to try to qualify. And then you can also hedge yourself against any future incidences or pandemics or any problems that may come up and arise, because both of you guys aren't on the loan, so both of you guys wouldn't suffer credit damage at the same time. So those are the 3 things that you guys really want to look at when you are thinking about if you want to co-sign on a loan or not. Hopefully I was able to add some clarity. If any of this information was very good or useful, or you had any particular part that really stood out to you, please leave that in the comments. If you are in the same situation where you are about to get married and you are considering some of these things while you guys are talking on what you're going to do when you're about to get the house, please leave that information in the comments as well, and also share this video with other people that you think might find this information useful. Now, if you need some more information about home buying or your credit in relation to buying a home, then I have a playlist that I'm gonna connect for you so that you can go ahead and listen to that, and hopefully you can get some more useful information. I thank you guys for sticking around for the whole video. I'll see you next time.